So a lot of people, the traders this morning, are saying, look, we've sort of seen this pattern for the past year and a half where you get some worries about tariffs, you got to buy this dip. What are you doing?
I think that's right. I think, listen, he created lots of drama yesterday. That's his style. We've seen it. I don't necessarily think that the markets and investors should have been surprised because he's been kind of hinting at it for a while. I think maybe the way he did it is what the surprise really was, and it caused, the algos in the markets to have that reaction. In fact, I think, though, it's a huge opportunity. You look at some of the names that got really beaten up. Look at some of these energy names today. They're reporting, and now energy is doing better. It got really, really clocked yesterday when oil got clocked. But it just creates an opportunity. So you back the truck up.
Kenny, the 10-year yield is at 180s. I mean, clearly, we had a trade truce post G20. We had trade talks just this week. I think it did come as a big surprise.
Well, listen, I think it came as a surprise that he did it, right? But he's been talking about the threat of additional tariffs. If China doesn't come to the table, if we don't make this deal, he's prepared to increase them. He's prepared to put new ones on. So the idea of additional tariffs wasn't the surprise, I don't think. I think the surprise was the way that he did it, especially after, what the Fed did on Wednesday. I think he's trying to force the Fed's hand, right? He came out and said he was disappointed on Wednesday when he didn't get 50 basis points. So now he says, okay, if you're worried about trade and you're worried about the economy, I'm just going to create a little bit more drama and I'll create some more angst in the economy, and then we'll see what we get.
So you're picking up energy stocks. What else? I mean, healthcare is the other big notable laggard for the year. Is that a place you'd be looking?
I think you have to be careful with healthcare just for a little bit longer because, look, healthcare is on the back. It's got a bullseye on its back. If you saw the debates over the last this week, every single candidate's on healthcare. They want Joe Biden wants to throw the executives in jail, and everybody wants to tear it apart. So I think you have to just be a little bit cautious at the moment with healthcare. Let it play out a little bit longer. Certainly there are some values there. Some of those names have gotten really beaten up. If you're in it for the long term and you're fairly confident about what it's going to look like, I think there's certainly opportunity there. But I would play it a little bit more cautious right now.
Hey, Kenny, more broadly, what do you think about this notion that was raised coming out of the jobs number this morning that if you're a cautious corporate manager and you've already cut CapEx, we know what business investment's doing, do you turn to hiring next? I mean, we're seeing little tiny anecdotes of layoffs, Lowe's, Uber, Citigroup, Nissan in the past week or so. Could what happened to CapEx soon be happening to employment?
Well, listen, I think, look where employment is at the moment, right? Unemployment is did it get down to 3.6? I didn't see the number this morning, but either way, it's right there at all-time lows. I think there's a lot going on there, right, in terms of where we're seeing. You're certainly seeing, and you've seen it in the financial services industry as well, is that there's going to be more layoffs. But listen, a lot's going to depend on how the U.S. economy, how the global economy reacts to this ongoing trade drama, and is it going to cause more angst in the firms? And so I'm not so sure that you're going to see hiring get much stronger than it is, and I think that the path of least resistance is going to be starting to cut back a little bit, especially if the trade drama drags out and it really starts to hit home. I then think you could start to see layoffs increase, actually.
All right. Finally, I just asked Keith Lerner a moment ago about the significance of 29.50, which technicians point to as a level the bulls need to support. Are you there?
Right. Yes, that's the 50-day moving average, and so that's the level. And look, I think overnight 29.28 is the 50-day moving average. 29.50 was kind of that level that the market had found some temporary support. I really think the level is the 50-day, 29.28. We tested 29.36 overnight and bounced back. I think right in here it's going to churn for a little bit longer. It's not necessarily going to take off and surge today, but I think it should churn in here and build a little bit. So between 29.28, 29.50, I think is where you're going to find the base.
All right. Kenny, have a great weekend. It looks like you're already on your way. It's good to see you. Kenny Polcari.
Well.